The Cardano network has expanded in mind-blowing ways since the addition of smart contract capability. This development has brought it a step closer to competing with the renowned platforms such as Ethereum. Despite losses in recent months, Cardano's price predictions should be fairly optimistic. Cardano should eventually become one of the most technologically advanced blockchains in the market. But is it enough for it to thrive in 2030? Cardano is one of the most popular cryptocurrencies in the market today, and price predictions in the double and triple digits are not out of the question. Those high price targets may take time to play out, but it is reasonable to consider since Cardano is already one of the top 10 cryptocurrencies by market capitalization. Two of the biggest factors to consider for Cardano price predictions are supply and demand, and of course, the Bitcoin price. As demand expands for ADA, its limited supply will lead to an increase in Cardano's value. This will further be heightened by the increased interest in Bitcoin in the coming years. The growth of the Cardano platform, its user base, and increased partnerships will likely increase demand for ADA. However, we have to understand that an increase in Cardano's worth should not be envisaged if cryptocurrencies meet their wits' ends in the coming years. So far, Bitcoin has suffered a catastrophic crash, with its value plummeting over 75% from its all-time high, despite industry pioneers creating a controversial crypto rescue fund. The Bitcoin price has been hit by stock exchange collapses and a looming regulatory crackdown, erasing around $2 trillion from the combined crypto market. However, one of the most bullish Bitcoin advocates has issued a huge price prediction, forecasting the Bitcoin price to explode to a massive $1 million per Bitcoin by 2030, even as another crisis is threatening to engulf the crypto market. The ARK Invest Management chief executive Cathie Wood said, "We think Bitcoin is coming out of this smelling like a rose." Bitcoin's proponents has maintained that Bitcoin is uniquely isolated from the current crypto crisis, leveraging its decentralized nature and fixed supply of 21 million Bitcoins. According to them, these attributes set it apart from other cryptocurrencies and the problems facing the crypto companies. "You need to get through the crisis to see the survivors and battle test the infrastructure and thesis," Wood added. Wood went ahead to predict that institutional investors that have been waiting on the sidelines of the Bitcoin and crypto market for years will eventually be able to take the plunge into Bitcoin and even Ethereum. Once they actually do the homework and see what's happened here, I think they might actually be more comfortable moving into Bitcoin and perhaps Ether as a first stop because they'll understand it more, she said. The Bitcoin price has struggled to rebound following its FTX-induced crash last month, with market watchers forecasting big players could forget about Bitcoin for a few years due to the failure of FTX and other big crypto companies. Generally, it takes so much energy to stay positive about Bitcoin and other cryptocurrencies, but some are not wary of venting their honest opinions. According to a report, SwiftX CEO Alex Harper recently warned his company's employees that the crypto industry was likely to face more black swan type events. One of the main Australian exchanges, SwiftX, just announced its most recent string of layoffs. The company fired 90 employees, which represented 35% of its entire workforce. Another major cryptocurrency exchange, Kraken, also took the same action. Following the sudden implosion and crash of FTX, the entire crypto industry has plunged into a deep crisis. The Binance CEO, Changpeng Zhao, recently warned that crypto could face a 2008-style meltdown. Zhao believes that the exchange's collapse could potentially initiate a domino effect. Then history is about to repeat itself. In a now-deleted tweet, Zhao threw shades at his exchange rival over mass layoffs. After experiencing some pushback, the Binance boss said that there are definitely some problem with staff cuts, claiming that it's all about risk management principles. Even before the FTX collapse, Black Swan author Nassim Nicholas Taleb predicted that the cryptocurrency industry would experience a full-blown ice age. The BlackRock CEO, Larry Fink, shared the same opinion, predicting that the majority of existing cryptocurrency companies would end up failing. Simply put, no one is seeing crypto in a positive light currently, and how much more would they see it in 2030? Despite the heightened level of discouragement and negative vibes, Cardano is still vying to keep things up. The Cardano stablecoin JED 1.1.1 just launched on testnet with Vassal compatibility and new user capabilities. This was revealed in a tweet on December 5th by Coddy. It read, "We are happy to share that the public testnet version 1.1.1 of JED has been reactivated with new capabilities such as Vassal hard fork compatibility, activity history, and more." Coddy also revealed that users can now view and display logos of Shin and JED and the names of both tokens. In addition, the wallet now supports divisible units for Shin and JED. Furthermore, the testnet will permit users to view their previous transactions. Notably, Coddy also unveiled that there will be consistent maintenance activities on the testnet. The Cardano network, among other things, proposes to denominate fees on the network in JED. The Cardano community is anticipating the launch of the stablecoin, and most of them have received the news of the new testnet features with excitement. But as always, there are a few who have expressed their skepticism. A certain user who describes himself as a crypto anarchist urged his followers to steer clear of the stablecoin. He alleged that JED would run on Cadi's trust chain, which utilizes direct acrylic graph technology instead of the blockchain for increased scalability to meet the demand of global payments. He also poked holes at the fact that Cadi had advisors from Goldman Sachs and HSBC. Would you put your trust into a stablecoin issued by a global payment network that doesn't run on blockchain, but is based on DAG and not too many full nodes, had a partnership with Celsius, and got advisors from Goldman Sachs and HSBC? He asked. Plus, he also directed his followers to unfollow him if their responses were positive. However, these claims painted by the user were inconsistent with the information shared by Cardano and Cadi. For instance, a blog post clarified that JED would run on Cardano and not the trust chain, and Cadi's role is limited to developing the user interface, user integration with smart contracts, and enterprise partnerships. These claims are not strange. Cardano's previous upgrade had their fill before launching on the network, in the same way some investors think that Cardano will never reach $100 in the long term. While some have given up on algorithmic stablecoins delivering at scale following the Terra USD depegging event, the Cardano founder Charles Hoskinson remains visionary. In a recent tweet, Hoskinson described the algorithmic stablecoin as the gold standard of the digital age. By supporting these stablecoins with deflationary digital assets, he believes they have the potential to replace national currencies. The concepts of algorithmic stablecoins is how we get nation states off of fiat currencies. It's the gold standard of the digital age. Use a deflationary cryptocurrency like Bitcoin or ADA to collateralize a stablecoin that is used as a national currency, he said. So the question is, will JED be worth all the defenses and explanations? Well, of course, that remains to be seen, but developers hope to allay the fears of another Terra-like collapse by conducting stress tests and releasing audits. Cryptocurrencies are going through what may be the leanest period in their lives. While some of them might be in a relatively better position than others, all of them are confronting a volatile situation. Amid these conditions, future price predictions keep flooding the market. Of course, no one wants to live in a future that is currently lacking a sneak peek. So, the question is, what does 2030 hold for our friend Cardano ADA? It is important to note that the big upgrades are coming, such as the implementation of Hydra, a layer 2 protocol that will make Cardano faster by processing transactions off-chain and securing them on the settlement layer. This improvement will imply that Cardano will be able to process 1 million transactions per second. Cautious investors can gain from Cardano as a short-term investment, but most preferably as a long-term investment. The Cardano upgrades could increase investor confidence in ADA, and Cardano will need to get back above $1 as soon as possible to rally to test the $2 to $3 level, regardless of the squeeze. So if we fast forward to 2030, Cardano could be running top countries and become the lifeblood of many multinational corporations. Beating its current all-time high by 1,200% in 2030, Cardano ADA will hit a legendary high of $40 and hold strong with an estimated low of $34.18. For now, a $100 hit for ADA will come like a miracle. According to this prediction, it's best to invest in Cardano if you're prepared to play the long game. The price charts even suggest that it could be a smart investment for those who are happy to take a long ride. Crypto will definitely get better, and Cardano will soar in value. But of course, we can only hope for the best results. But of course, what are your thoughts on this? Let us have in the comment section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe notification buttons.